Hey, everybody, it's Pete Carmasino here with Chaikin Analytics. Welcome to this week's halftime show here on StockCharts TV. We appreciate them hosting and helping us produce this show week to week. So thanks for joining me. Well, welcome back from a long weekend. And Friday was just really sort of out of the blue. We know we've got a new variant. I think we got to learn to live with that. That's just part of what's happening here in our society now, right? So it came obviously as a surprise. I guess some people have talked about it and kind of knew or expected something like this to happen. You just never know when, right? Right in the middle of holiday season, things are reopening. We're looking great. And, you got to stay disciplined and you can't get complacent. I say it all the time. But at the same time, you have to pay attention to the longer term trends. And that's kind of what our power gauge does, right? Our power gauge puts things in perspective along with, from fundamental standpoint, along with the technicals that you can use here on ACP's platform on StockCharts TV. And it's excellent. So when you put those two together, hopefully you can find your areas of support, or if you roll back on a stock or an index, you know when you can potentially take action, and vice versa. When things do get oversold, there's an area and opportunity to add as well. And so what can I say? I mean, it's a choppy couple of days here. When you see these big down days and followed by big up days, you shouldn't be surprised. And it's kind of the market's working, and it's always worked that way. So, a lot of people say if you miss the 10 best days in the market, it affects your returns. But imagine if you miss the 10 worst days, almost impossible to do because they're typically right next to each other, or they're one after another, or within weeks of each other anyway. And so take things in stride and, again, stay disciplined. So today, we've got like equities higher, sort of mid-morning trading right now. Dow, the S&P, NASDAQ are all up, although small caps are kind of trailing. So the Russell 2000 is not participating. And again, it had a rough patch here for several months, but it just doesn't look like it's following through today anyway. But Texas standout. You're seeing the mega caps really run today, and energy is sort of an underperformance. If you saw what happened to oil on Friday, go take a look at the chart. It got pretty, it got hit pretty hard. So you are seeing treasuries weaker, so that's steepening the curve. You're seeing rates rise a little bit, expected, right? Treasuries rallied on Friday because it's a risk-off trade, right? More of a safety, emotional type trade. And then obviously you're seeing equities rally, so treasuries kind of selling off. But I think the trends are intact as we speak. We're seeing the S&P right around the 4640 range. Above that 4,600 of technical support. Hopefully it stays intact and gets above 4,650 and then obviously regains its trend. But today we're going to look at the home builders. I'm picking that segment because our ETF comparison page we have on here on Chaikin Analytics has that as the top subsector. So we're going to dive into that and take a look at some names. So let's go to the charts. Okay, I'm starting here on the Chaikin Analytics ETF comparison page, right? And if you follow my arrow around here, you see home builders is ranked on the top one, but the right behind it is semiconductors. And I think, both are playing a role, or should be playing a role in a lot of portfolios, but at the same time, it's very, very much a stock picker's market. Stock selection is key. It always has been, it always will be. And those are the things that, you got to kind of use in your favor. And that's why when you take the power gauge, along with the technical setups, you're hopefully putting more evidence on your side, right? That's kind of what we're looking for. So if I go back to the ACP platform, XHB is the the home builder. Sorry, I get semiconductors on the brain. The home builder index, XHB, that's number one ranked, again, in our sub-sector group. The way we rank it is by number of bulls to bears. So that's actually got the best ratio right now. And if I go to the workspace, I can see a lot of names in here that we're going to talk about. And so I'm going to start alphabetically. And this one actually is O Smith. They're typically, it's a building product company, obviously, but they really focus on water heaters, electrical and gas water heaters. So when you start to see what's happening in this stock, obviously a massive move higher, as I truly believe that people are continuing to upgrade homes. And obviously, TVs, furniture, outdoor living and those kind of things happen maybe sometimes first. Maybe they shouldn't. You should be changing sort of the guts of your house. But
you're starting to see this name really break out in an aggressive fashion. But a little pullback here, and I'll show you what it looks like on our charts, is showing an area of opportunity because we are getting oversold, and you're starting to see that relative strength stay strong. And we're obviously very bullish on the name. And so you've got earnings coming out in January, and it did rally on a big earnings beat, but likely more on guidance. But you got to dig in and take a look at that. But it's a strong stock in a strong industry to start with. And if I start and look at the builders, obviously, which is the ETF in general, it does have, it's really considered consumer discretionary because it's not just about building products and home builders. There's all kinds of names in here like Williams-Sonoma and Floor and Decor. But we're going to look at the next one on the list, which is another building product and building material name, which is Builders FirstSource. Also, a stock that has been in a very strong uptrend, very bullish. Look at the experts. Financials and earnings are all really hitting on all cylinders. And if I go take a look at this name here, it's second on the list, BLDR. I mean, incredible. Look at the PE, a very low PE. It's not oversold, but it's giving you really strong relative strength. Again, a strong stock in a strong industry, an earnings beat by a massive number. I don't know if that was actually, obviously, it wasn't expected, but I think guidance is probably more important here than anything. And breaking out of that level of that $49 area really put it in a really a breakout situation, as you can see here on that between 50 and 55. This stock really has taken off. We'll go look at Floor and Decor. Now, if you haven't been to this place, it's pretty amazing. It's amazing that the amount of inventory that they still have, and some areas may be more affected than others. But in our spot down here in Florida, we've used them several times. It's a pretty cool and amazing, really, resource of flooring material of all sorts. So stock's been choppy. It is a neutral plus, so it's below our long-term trend. But financials probably weighing it down a little bit on the rating, right? So if I go look and try to find Floor and Decor, which is down here, see it's in the neutral plus category for our system. But if I look at financials, again, probably valuation holding it back, although free cash flow and debt to equity not looking great. So those are things that you want to pay attention to from a technical standpoint. The stock is strong on a relative basis. It is coming off an oversold level, but Friday didn't really have much of an effect on it. But I think going forward, this one's got more of a mixed bag than an easy one to read. Now, Home Depot and Lowe's, I mean, just have been on fire. Again, valuations coming into play for Home Depot here, although it still manages to hold on to a bullish rating for us. And so when I look at HD here on our system, man, you can see where this really started to break out was right around this 340 level. And I mean, it really almost went up 100 points in just a really short amount of time. So Home Depot and Lowe's both looking pretty strong. I mean, there's no doubt about it. And Lowe's here as well, up 3 and change. Another name that started to break out here, but I'll point something out. Relative strength gave us an indication down here at 207 to 250. So again, a really strong move in a short amount of time. And obviously that a lot of things are playing into these moves. Seasonality, inventory levels. I kind of pointed out that in some cases, if you're looking for things in Home Depot, they're out of inventory. The next logical place to go look is Lowe's. And so they could be feeding off of each other's, inventory issues. But I think overall they're serving the market pretty well, and earnings and everything else are kind of hitting on all cylinders. So kudos not only to the stock but to the management team, which really is behind the stock. Remember, behind every stock is a true company. People get up, go to work. You can go see them, right? You can go visit them. If you own a stock like Home Depot or Lowe's, companies, or Floor and Decor, and you're not going to check them out, going to their retail establishments, I mean, I think you're doing yourself a disfavor. You should totally, absolutely go and just do some market reconnaissance and go check it out. Next one on the list here is Masco, or Masco. It's building materials, a lot of cabinetry and things of that nature. But again, a big move higher here recently. Also a bullish name, pretty mixed bag on the power gauge here. So it's kind of every other one here. Financials and technicals are kind of weak, although the technicals have just recently firmed up, and experts in earnings are in great shape. So I think you'd see that reflected. But again, from a bullish name here, you're getting decent performance, not too negatively affected from a Friday move, but relative strength is strong. And so technically, it is actually starting to get better. And as that happens, our power gauge will likely upgrade the technicals at least to neutral and maybe into bullish, but it's going to take some time because not only do we look at the levels and the trends and things of that nature, but we look at the amount of time they spent in a bullish or a strong relative strength, relative to the spot. And so time is a factor, not just the setup. But this is an early change. This would be considered a relative strength personality change for us, meaning the stock has changed from a negative personality to a positive one, and it's just got right up to resistance and kind of faded away from it. But I think any break above here may be an opportunity. It could be. I mean, take a look at it. Pulte Home, obviously, you've heard of these folks. If you haven't, they build a lot of houses. And technically not the best looking stock. And look at our technicals here. I mean, it can't get any worse, and the experts are kind of not on its side either. And so this is obviously creating a neutral standpoint because you've got amazing financials likely due to valuation being considered cheap, but don't get caught in a value trap when you start to look at these names. This is where this kind of helps you out. When you want to see all of these in your favor, but if you can catch an early technical change on a stock that has strong financials and strong earnings, that's probably the most optimal setup you can get. But if I go to Pulte Home here, I got to type it in because it's way down on the list. PHM. And you can go and we'll look at the technical factors, right? Just pretty negative stuff here. I mean, relative strength broke down and really hasn't recovered. That's why we're neutral and likely potentially turning bearish. I can't predict that, but if earnings come in weaker or anything else kind of breaks down, it might break down to a bearish name. But because financials are so strong and fundamentally could be a good company, but maybe not the right stock to be associated with. So you got to be careful with that. And lastly is Williams-Sonoma. We'll take a look quickly at this name. Again, easy stock to go, take a look at, or easy company to go look at if you're in the neighborhood of Williams-Sonoma, which most of us are. You can go check this store out. It's pretty phenomenal, an amazing holiday store for sure. You can find a gift for almost anybody in there. With a big gap up back here in March, sort of consolidated and then started to move higher. I like the chart on this one. I think it's pretty strong. And I think, if I'm not mistaken, it's up here pretty high. Williams-Sonoma on a very bullish rating. Let's take a look. It is an oversold setup here. Strong money flow, pretty strong relative strength, staying strong really, with a great rating. Again, putting the evidence on your side.
Okay, that's all we have today for the halftime show here on StockCharts TV. Again, I'm Pete Carmasino with Chaikin Analytics, Chief Market Strategist here. We went over the home builders, and I hope you got an understanding of how we kind of view things from a power gauge rating and a technical perspective as well, using both the ACP platform, the power gauge plugin, which is easy to get, very inexpensive to add to your toolbox. And then obviously, if you came over to Chaikin Analytics, you get the full experience that I show you on these charts. But anyway, thanks for tuning in. Be well, stay disciplined. We'll talk real soon.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.